Hi, my name is Jason Watson with the Watson CPA Group, and today we're going to talk about accountable plans. What are they, how we use them, why we need to use them, all that good stuff. If you reimburse yourself for expenses that you incurred personally, the IRS is going to call that compensation, taxable income to you, unless you have an accountable plan. And we'll talk a little bit about that here in a second. There are three kinds of expenses, right? There's 100% business. That should be paid for by the business. 100% personal, food, all that stuff, that's going to be, of course, paid by you. How about all the things in the middle? Things that you use both personally and business, that's what we call mixed use. Okay? Common examples of those mixed use expenses are going to be home office, cell phone, internet, and a car. Okay? Home office, typical home office type stuff. We take your home, we have expenses associated with that home, mortgage interest, the property taxes, maintenance, all that stuff. And we're going to assign a business use percentage based on square footage, okay? Cell phone, everyone thinks their cell phone's 100% business. Unless you have two cell phones, it's typically gonna be a mixed use item. The minute you get the, hey honey, bring some milk and eggs home, all of a sudden your cell phone is less than 100%. Internet, that's fairly common, straightforward. And then your car, if your car is owned by you, okay, and you're driving it for yourself and for the business, that's a mixed use item. The company owes you money for the business use of that car, typically done by mileage, okay? Where we see this being used a ton is in our S-Corps. Now remember, as an S-Corp, you wear two hats, investor and employee. As an investor, you don't get expense reimbursements. If I invest into Google, and I have some expenses with my investment into Google, they don't owe me anything. But if I work for Google and they ask me to go do something for them and use my car and use my money to go buy some pencils, now they owe me money. So as an S-Corp, you're two things, investor and employee. So when you reimburse yourself for some of these mixed use items, you're doing it as an employee. Now, how often are we going to do this? Quarterly, right? Memories grow short. Quarterly makes a lot of sense. When we do planning for you, which is probably 2 to 3 times a year, we need to know what your quarterly expenses are that you're going to incur for home office, cell phone, internet, and car, and all that good stuff, so we can assign a tax obligation to your net income from your business. So we like to see that quarterly. Honestly, most business owners do it during tax time once a year, but if you can, quarterly is more ideal. How do you pay yourself? Transfer the money. You probably got your business checking account and your personal checking account at the same bank. You assign a number to all this. You say, hey, I'm going to transfer the funds from my business account to my personal account, done. Or you can write a check, all that good stuff. So that's how we do that. And then to make all this work, you have to actually have a policy to govern it. And that's where the accountable plan comes in. Business connection, substantiation, all that good stuff. We draft this document for you, don't worry about it, but it is something you do have to have outlining how all this is being reimbursed. Again, my name is Jason Watson, Watson CPA Group. If you need any more help, give us a call, read our book, go to our website, all that. We can connect and figure out how this works with you and your business. Thank you.